You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, did you know that as of Monday, the 500 wealthiest people in the world lost $206 billion? And I know if you're like me, your heart bleeds for them and you're mourning and you're really upset. Well, the rich aren't necessarily evil, but there certainly are evil rich. The fact is that the world cannot survive without the rich. And I will quote the late, great Reverend Ike, who is a preacher up in Harlem. And he once said that the best thing that you can do for the poor is not be one of them. And truer words were seldom ever spoken. But just because that's the best thing you can do doesn't mean that's the only. Staying healthy, staying financially solvent should be, if not one of your major preoccupations, definitely up there in the top 10. Joe Robert is with us now. Robert Ventures is the company. Joe, you've been investing in crypto, real estate, numerous asset classes for your entire life. Now you're primarily invested in digital assets, cryptos. You believe that the entire world is going to digital assets. What do you base that belief on?
Well, I just look at kind of the, thank you for having me on and, bringing me in all the listeners here today. Obviously, I've survived through the last 20 years of the financial different things that have come and gone. And what I've started to see over the last decade is just in my everyday business, you notice that you're using technology, even if it's cell phone, if it's QuickBooks Online, and almost every company has been turning into a technology company along the way, right? They're kind of automating or making things a lot more efficient across each company. And so that's what got me into the space, is understanding that we're going more digital and technology and software is eating the world.
I couldn't agree with you more. I mean, even doing the show, I've always been, if not quite on the leading edge of technology, a little bit behind that, maybe the leading edge. When you're leading, you're bleeding. Stories are full of companies, right, that had the next great thing, and you never heard of them. You don't hear of them anymore because they're gone. So we're all heading to this digital lifestyle, if you will, digital economy. Does that translate into cryptos automatically being the coin of the realm, if you will, for the future?
I don't necessarily think, I think when everyone says the crypto market, they shouldn't, think of that as the whole entire market, right? I mean, there's kind of a lot of discussion here, maybe around, blockchain, crypto, security tokens, and Web3 technologies, right? For most people to look at this and understand what is happening, it's really software behind the scenes that is, creating, things that to be more efficient and removing layers in between or those middlemen to bring down the fees for those creators or to interact with their clients.
Okay. So one estimate I saw, basically the cost of intellectual property is somewhere 50 to 90% of all of the items you buy in the world, not including food so much, but in terms of technology, automobiles, airplanes, it's everybody getting their little piece of the pie through patent, through intellectual property, and probably no better way to keep track of IP than through the blockchain, right?
Correct. And, for very simple things is maybe like a car title. Obviously, for every one car, there's one car title, right? And there's typically a VIN number. So if you also look at that on the blockchain, right, where you create a token ID number that would represent one automobile, but it can't be duplicated. Where if you have that paper title, it's very easy for someone to go and be able to duplicate that and have fraud involved. And that's the benefit here applying blockchain technology to these different aspects and being able to record, assets across the world to help prevent that fraud.
Well, you said every car has one title. Unless you're in the Bronx, New York, it could have multiple titles there. Okay, so NFTs. All right, clear this up for me. Why does having the digital rights of some masterpiece that you cannot sell or reproduce or anything else, you've just bought a picture on the blockchain, why should that be worth any money?
I was not an NFT investor over the last year or so, even though I'm in the space. After being in the space the last 4.5 years, I've seen a lot of different ideas come and go, and we'll call them hype cycles, right? And, essentially, as you look at an NFT in its current form over last year, is typically like a JPEG on a server. And then that NFT, which is basically that hash, that code, token ID, represents that your ownership or that control of that asset over on the server. So, the way things work in life is supply and demand. So if most people think that JPEG is worth more because it's backed or secured by an NFT, which validates its authenticity, then yes, it would be worth more. But those that don't, and they just think it's another JPEG, then obviously that's probably what we're about to find out in the market. What is it really worth, right? It might not be worth any more, than the existing JPEGs on the internet.
I love it. Yeah. I think you really explained it so succinctly and well. Is a JPEG on the blockchain, is it worth more than a JPEG on your hard drive in your computer or up in your email, whatever? I think go back to our good friend Klaus Schwab, author of The Great Reset. He said, you'll own nothing and you'll be happy about it. I think he was talking about NFT owners.
That's good. And yeah, I mean, just, how we look at NFTs is maybe a little different than what has been projected in the last year in the market, right? It's mostly been projected by these JPEGs, these characters, Bored Apes, etc. But I think the concept in which we're actually applying that IP or ownership or something is the long-term vision of how this is going to be the best application.
Yeah, exactly. So, all of our title documents, everything you have, they're not proof of ownership, they're evidence of ownership. And if you've got this thing on the blockchain immutable, that could be the ultimate proof and ultimate evidence that you own something. And that's, as a lawyer, recovering attorney, speaking from that standpoint, I really look at it. So, Joe, like us alternative investors, we're square pegs and round holes here, right? We're kind of looked down upon by the mainstream Wall Street churning and burning mills. How'd you wind up seeing the light on alternative investing?
Wow. Well, I think it just really started when I was younger. And, during my teenage years, I started as a contractor, and then I had the ability to buy my first house at 19. And once I resided there, fixed that up and sold after the 2-year mark for that tax-free advantage, right? That gave me the first insight and the ability to go out and invest in this different asset class outside of the traditional world that they mostly taught us in school. And that was probably the starting point. Interesting.
Yeah. Well, it was one day when my brother in 1965 brought in the new quarters that were zinc copper clad, and he dropped silver quarters on the floor and then these fake copper-clad coins. I still remember to this day the difference in the sound of silver had this musical ring, and the copper-clad coins were just nothing. They just kind of and they were light, cheap feeling, and that kind of set me down the course. So alternative investing, we're looking at cryptos. I've absolutely gotten slaughtered. I've got a small crypto position. I sold off the majority of it 2 months ago, just because I was looking at the market, and I just said, it's a good time, even though I'll take a hit on it, a good time to raise some capital. So when stuff gets really cheap, and then I hopped back in once Bitcoin dropped below 30,000, started buying it there, and I'm buying it all the way down to wherever it goes. But if you bought in at 67 or 69,000 that day, and now we're down to 23,000, 22 and a half, you're feeling a lot of pain, aren't you? Especially if you use leverage, like God forbid you borrowed off your credit card to buy the stuff.
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, as we can see what's happening in the markets and across the crypto Twitter feed, right? There's a lot of large institutional players that have utilized leverage in order to, let's call it outperform the markets or take advantage of possibly more upside. And, while there's a lot of, it's called buzz going around right now, we'll for sure find out in the next few weeks what the actual outcome is. So I don't want to exactly speculate, but definitely from this, we'll call it deleveraging, even from the tech stocks, the stock market, now into the crypto market, there will be people that go out of business.
Yes, there will. In December of 2017, I called the peak then. And then in November of 2021, I called the peak again. People told me I was nuts. We're approaching a really technically dangerous point for Bitcoin, because if it breaks below 19,700, there's no telling how low it's going to go. So do you sell some now? So you have some fresh powder, or do you just ride the roller coaster with no seatbelt on and hope you don't get thrown from it?
Well, never financial advice, just opinion of maybe what I would do is, one, you got to take the side of obviously what you're investing in, whether it's crypto or not crypto or stocks or any asset, right? First, you need to believe in what you're investing in first, right? And if you take the side that you believe what you're investing in is going to be here in 3 to 5 years, then at this point, what I see in the market is a buying opportunity, and just approach it always from like a dollar cost average, right? Bitcoin could go down to 10K, it could go back to 30K. We have no idea. You can't predict the future, or we would time the markets. But I think at this price point and the sell-off we've had across all markets, if you are continuously buying every month for the next 12 to 24 months and you believe in that asset class, I believe historically in the US, it will pay off in 3 to 5 years.
I agree with you. Although I will take exception to one thing you said. You can't time the markets. I agree with you there. That was my mistake on Bitcoin. But peaks are so much easier to determine than bottoms. The chart on Bitcoin for the past year has been horrendous. It's been a negative chart. And yes, it had some spikes up. But if I go from this year alone, it started out at 47,000. It really hit 47 again in March, never went beyond it, and never set a yearly high. That's a really negative chart. And the other thing about Bitcoin is it trades purely on emotion. There's no fundamentals backing it up, meaning there's no factories. There's not a Bitcoin factory stamping the things out. I mean, there are mines, but you know what I'm saying? There's no fundamental case for Bitcoin. It's strictly supply, demand, emotional. So in some ways, it's easier to pick the highs and lows of Bitcoin than anything else. I thought it was going to go down to 3,300 way back in 18 and 19. That's why I didn't buy then. And that was my big mistake. Actually, my target back in 18 was 2,200, and it never quite made it. Like I say, it's a lot easier to pull the highs out than it is to pick the bottoms.
I agree there. That's definitely, and probably the other side to that is for the majority of people, they can't actually sell though. Also, or the emotions on both sides of trade is what's hard for them to control, right? Even if you could pick that top, because every taxi driver is getting involved. Well, it doesn't mean that you don't think, oh, if it only goes up double more here, I'll be even better off. So you don't sell, right? So for the majority of people, they can never time the top or the bottom.
Hey, well, you know what they say: if the Uber driver and the pole dance instructor are telling you about the latest crypto, time to get out.
Or all the celebrities like we've seen, right?
Yeah. Yeah, I'm curious to see, and I'd like to get your opinion, Joe, because you're knowledgeable on the topic. So Tesla bought all this crypto, and they were way, way up on it. I think their basis was about 30,000.
I believe that's correct.
Yeah. So my question is now, because I think the master of coin there at Bitcoin knows a lot more than most of us. If they were selling puts or selling futures, the smartest thing to lock in that profit when you got hundreds of millions of dollars, even though to Tesla, wealthy company, doesn't make any difference, is to lock in with futures. And then, hey, if it goes up, it goes up. But if it goes down, you covered yourself.
So do I think some of these large companies have hedged their positions, basically? Right. My initial thought would be no. They just bought it for the balance sheet and they're running, their company, and it wasn't maybe thought of that it would come back down like this low, right? I don't think they're in that business. I don't know from a regulatory standpoint, even in how that would look or what they're allowed to on that balance sheet and compliance wise to be able to participate there.
Yeah, it's just an interesting question because I just have the feeling about it. But, hey, Dogecoin, whatever, everything's into the dumps. Going to be interesting watching Tesla's next filing to see what it's worth. Honestly, the amount of money they had in Bitcoin, it's not even material anymore compared to like the $30 billion cash that they're holding and their sales and all that. So they might not even report it conceivably, which will tell us a lot right there. If they just don't happen to mention their crypto, it just gets lumped into other assets and forgotten.
I think a lot of it being marked down, right? I think that's part of the accounting problem is that they're making everyone mark it down, I believe, to like the last reported price. But I mean, overall picture here, how does this play out with Tesla's stock price coming down, Twitter, what's happening over at Twitter and Bitcoin, right? Like, was Elon also taking a little bit more on than, biting off a little more than he could chew at this time with all the markets? And now they're kind of in a downward spiral. How does that impact maybe his acquisition, and other things?
Yeah. Good question. Hey, finally, everybody has rediscovered the joys of inflation, or shall we say, rising consumer prices and diminishing purchasing power of currency units. Can you just chime in on that? Let us know what you think.
Yeah, I mean, right now, obviously, we've been running over 8%. So they're trying to raise the interest rates to tamper that, that inflation and bring down the cost of everything down, bring that inflation back down to 2%. So far, they're not doing very well. And that's why they're meeting again to raise the interest rates. I think, from purchasing power over at least the next decade, you have to be watching this. And what you're investing in, your goal needs to be to at least try to outpace inflation, right? To at least maintain your purchasing power. And that's why you need to be in some type of asset or assets. Yeah, I mean, that's probably, what I would say there.
Okay. And something like Bitcoin, aside from the supply and demand dynamics, once the last Bitcoin gets mined, in theory, and probably in practicality too, that's it, right?
Correct.
With what's out there. So this is like the ultimate inflation protected currency, even though it's not really a currency, but it's an asset and could be the ultimate hedge. Hey, Joe, people want to find out more about you, connect with you on the web, listen to your show. Where is the best place to find you?
Yeah, I mean, for those that are interested in, obviously, what's happening in digital asset space, I have a weekly newsletter that goes out, with news of the week, and also a podcast that we interview projects in the space. They could go to Joe, Robert, wealthiest.com and subscribe there. I appreciate that. Or else, if you'd like to know what we're investing in or a credit and would like to talk to us, you go to robertventures.com.
All right. Excellent. And of course, you can just go to the show notes in this interview on financialsurvivalnetwork.com. Click the link. It'll take you right there. And if you haven't signed up for your free newsletter, please do it now. Just had an article on why electricity rates are going to double in the next 18 months. I'm not a genius. I'm not forecasting. It's baked in the cake. And if you got a question for Joe, you can always shoot us an email, kl@kerrylutz.com. We'll get you an answer. Joe, I really appreciate you coming on. You're going to be one of our regular go-to people on digital assets.
Kerry, thank you for having me, and thank you, all the listeners.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.